some reason I've hit the off button, stop stream instead of unmute. All right, we should be good to go now. Just wait for somebody. G'day, Helen. Paul, how are you, mate? All right, sounds good. We're up and running. Well, okay, welcome, guys. I hope we're all getting ready for a big Easter. I'm going to go and hide some chocolate eggs later on, get the kids running around, trying to find them. But we'll see how they go. They love that sort of thing. They love going to poppies and searching the garden for eggs. There's always little presents there from nannies and poppies. They love it. So that's what we got planned for the weekend. Yeah, I hope we're doing good, guys. For anyone that's new, I know I've spoken to a few people in the past, one today, just to see if all good, if they can hear me loud and clear. Welcome. So if it's the first time, welcome to TradeSetup. These live streams, we like to have a bit of a chat, a bit of banter back and forward about our trading and what we're looking at in the markets, what's happening. So if you're new, I hope you enjoy it. And if you do have any questions later on after it, and if something that you just don't understand or what's going on, feel free to send us an email to support@tradesetup.com.au and I'll get back to you. Also, what you can see on the screen, linking to us on Twitter, top left, Facebook if you like, not that we do too much on Facebook, that's the top right. Most importantly, on the bottom right-hand corner, subscribe to us at YouTube. So every time we do go live, you'll get a notification from them as well. So for whatever reason, if you're not on TradeSetup, which I suggest you should be, you'll see the YouTube pop up as well that we've gone live. That's about it. So today, I haven't got too much planned. I thought what I'll do is just talk about, obviously we'll go through the markets, what's happening. Not much last night. Looks like the US struggled to hold on to some gains. They didn't finish down, so it was good that they didn't get smashed again going into Easter. Who knows what's going to happen tonight? Close for tomorrow. I think there's no night session on tomorrow night. No. So yeah, we'll see how they go tonight, if they can hold up. I don't think too many people are going to want to hold big positions and want to take on extra risk going into the weekend over here or over there. That's why I'm sort of assuming that we're going to be fairly quiet. We're a bit more range bound today, bit, pushing up, chopping back again, selling off, popping up, selling off. So I don't think anything's going to change into the close for us. What else was I going to say? So the US, yeah, I think, was it the FTSE was down? FTSE was up, DAX was down, so it's a bit of a mix in Europe. US, yeah, like I said, they tried to pop up and they got sold off. So it was really choppy action overnight, which, in all honesty, after big self, it's not a bad thing. It's probably expected to. Just have to see how all these trade tariffs go. They're still argy-bargy, but I think it's Trump's sort of technique. Threaten everything and then slowly ease off, as he has done with other countries, exemptions on tariffs and things like that. And you're just trying to argy-bargy with China, which I think are quite good themselves. So they're used to that. So we'll see how that plays out. I think they both want to come to some sort of terms. So I think a full-blown trade war is not really on the cards. And you can see that it's sort of been factoring into the markets a bit now. Although the market technically is still looking on a nice edge, it could roll over quite easily. It is a tad extended down here. We might get a retracement and then roll over. We'll have to look at the charts in a second. What we'll do is look at the charts now. Let me just quickly transition to that, get rid of that. I'll go over here and away we go. Don't worry about that. So that's US market. This potentially could be a shoulder. It could easily extend through those lows and just spike down, take out this low here, which takes this low down at, was it 25.85? We're only a touch off that now. What are we at? 25.93. So the market can easily spike through that, take out this low, and like we said before, this is a massive lower high, and then you get that secondary move down, then start finding a bit of a base. It is extended down here, which is not a bad thing for bulls. Getting a bit extended now, support, so we might get some buyers start to step up to the plate. That's just your daily. So if you're looking at a weekly, it's, look, I don't know which way I'm favouring at the moment. There's still, the thing is, what's happening over in the US, obviously, was the tech shares on the Nasdaq. They're all getting hit a bit, and that's from overvaluations, from extended moves, all that sort of thing. We sort of knew, everyone in the right mind knew that that was probably going to happen, and he was expecting it. If you're expecting it too long, you missed a lot of the run up, but it it was expected. Valuations are overcooked. Um, they got a bit ahead of themselves, and there's a lot of heat coming out of that market. Plus, on top of that, you've got the problems with Facebook and their issues, and maybe further regulation. I better stop that. I better remember that too. Got a little notification going off. Um, so what was I saying? So yeah, that's what's happening in the US. I think there's more heat coming in the market, so that the probably, tech stocks are going to keep it capped to the upside, and they might, a bit of heat might have come. I mean, you can go sideways in the over index as they roll into other areas, out of tech into something else. Whether it's defensive, I don't know what's happening just yet. It's hard to say what, bit of rotation, what's going on over there just at the moment. So it depends which, from here, you can look at that chart there. You can look at the right-hand side on the weekly. You've got a couple of good, strong down days. We tried to react higher, and that reaction higher, you can see there's a couple of green, red, a green, and then a couple of red. So it is that two legs higher that we've spoken about a lot. That sort of contraction up, and then we potentially could be rolling over. So it's just whether or not we hold up where we are and build a big base, and it's going to take a long time, or whether we do this sort of thing, spike through the lows, wash them out. We might not get too far, in all honesty. It may, don't expect a massive sell-off. We may just take out these lows, get down to 25, and then start bouncing and do this type of action where we've washed out and up. But I think it's more the time aspect. It's going to be choppy for a while, and a lot of people are talking the same thing, expecting a bit of chop in the markets for a while yet, maybe 2018. So that's going to be tough going. I'm finding it now looking for stocks in the ASX. Nothing's jumping out too much, whereas when the market's heading higher, a lot of them are jumping out. There's a lot of good setups, quality setups, and you can bank a lot on them. Rather than at the moment, you can't bank on it. If you do see a good quality setup, it's hard to load the boat and to let it run, because the overall market's a bit tentative still. And you get a massive sell-off in the US, we get dragged down, and that quality setup can turn around on you, turn on a dime, and stop you back out again. So it's a tough going. I don't think it's worth risking a lot in this market, but it's still, you see a setup, you got to go at it. Where are we? Dow, not much to talk about there. Pretty much the same. Dailies looking a bit tentative too to get through that 23, so pretty much identical. FTSE, it's grinding lower. It's not too severe though, to be honest. We got that big sell-off, green candle, a couple of red, green. That sort of choppiness is not too bad to see, where it was sort of similar on the way down here before we started getting that bounce. It's just a clean out. That's the way I'm looking at the moment on the FTSE. It's more of a clean out. The fear was originally in it from these highs as we got smashed, but then it's more just a bit of a clean out. People booking some gains, whether they're bored on a bit of a bounce short term, booking some short term profits. The DAX, yeah, we're still hovering around that 12,000 mark, so nothing much has changed there. XJO, that weekly is the one sort of got an eye on, and we've spoken about this, towards that 57 to 57.50 zone, where if it's going to take out these lows, which is just borderline today, what's that low there? 57.86. We're just below that today. See if we can finish above that low. We'll see. It's just cleaning out that low. So on the daily, good solid move down. You can see these lower highs pressing. So the market's moved down, popped up lower high. That's when all the proverbial hit the fan. Good sell off down to 58. Good bounce, but that's pretty much a V-shaped recovery. And then you got that lower high, and then all this kind of, it tried to go higher again. You got the lower high back at 60.25. It's really putting pressure on, coupled with that lower high there, and that's why the market's just cleaned out and a big move back down. And we're just taking out that low there. So again, just trying to look at where we could be going to on the market. It's extended down here on the daily, so it's taken a fair bit of energy from the sellers to push it down here. So you just want to look for zones where potentially the buyer's going to step in and try to, soak up that selling. And on the weekly is probably the only thing left. When the key zone for that weekly we've spoken about before is 56.50, just through here, that support zone for the last leg up. How deep is this correction going to be? Are we going to start holding up here, or are we just going to blow straight through it? We may get through 57, bounce, build a lower high, and then go. Then for me, if that happens, we've got a longer term contraction lower. We've got a more serious problem, if that makes sense. It's going to take a lot longer for this sort of negativity to get pushed out of the market again. But we'll see. Nikkei, yeah, it's just contracting lower. The longer term weekly is still up. We've got key levels down at that below 1950, just above 19,000. Minor level here. I mean, that's extended right up. You can see that move from just above 19,000 up to 24. That's contracted a bit here, but it's still, with respect to those high lows, this is the anchor to the trend up. It's still holding. So technically, it's still holding that trend up. Obviously, this most recent action is not looking too flash at all. But again, just a lot of traders getting flushed out there in the Hang Seng. Along the same, it looks like it's building that lower high. But again, just have to wait and see. Now, what I thought I'd chat about today, rather than getting too into the tech stocks, I just want to touch on um, your basics of, not say basics of learning, but what well, just an idea of what I like to do and what I have always done in the past to try to help my learning. I think it's always good, and I think it's good. It's good practice for everyone. I'm not saying you should or shouldn't do it, but I would regularly. I've got a bunch of charts to the point of slowing down my hard drive. Of when you try to load, you open up different folders just of charts, whether they're trades I've done or whether it's a chart of after the session. I'll take a chart, just take a clip of the 5 minute and then 1 minute, and just start circling trade setups that I like that suit me and that match my style of trading with price action. And of course, obviously, I've got my stochastics and EMAs and things like that. But what I like to do when I've got away from it a bit lately, especially just focus more on stocks and shares and movement on those. I mean, I'm taking snapshots anyway, but I've got a plethora of charts handy just to go over what sort of setups that are prime, what are not prime. So what it's good is just, especially with futures trading, industry trading, share trading. Sorry, not share, FX trading. It's good just to take a bit of a snapshot. So I'll just go through charts. Just randomly last night, I was looking at some currency pairs, not trading them, just marking up different levels, levels that are key interest levels that you're potentially going to get some good reaction, whether it's a reaction high or reaction lower, but where you could potentially build a trade from. Just marking up where you got those key zones, whether the market's, um, trending higher from what we call bid to offer. So from a support to a resistance zone. Is it long-term trending? Is it long-term consolidation? And within that consolidation, you've got short-term trending, all that sort of stuff. And just marking it up and that just gets you in the zone of, it builds your mind, I think. It starts programming your mind what to look for and what suits you. I mean, I guess, it's hard to do if you not really know what your style is yet. If you're new to it all, okay, so be it. Just you got to keep going along those learn what the markets are about, learn what's happening on with technicals. What a high low means and all that sort of stuff. And once you start learning that, you start learning price action or however you want to trade. But once you know what sort of style suits you and what you're understanding, what's making sense, then it's probably a good habit just to get into marking up some charts. And you don't have to mark up trades you've done, but I just think it's a good way to practice. And you can always go back because there's always going to be a time when you're having a bad patch, a rough patch, and it's worthwhile. I've always used to do, especially with intraday trading, because you tend to go through those bad patches a lot more. Is just go and refer back to the charts and refer back to what you're looking for, just to keep you more focused on what your setups are. So sometimes you can have a bad patch, whether it's just a bad patch purely, you're doing everything right, um, but it's just not working out for you. And then you get back to your charts and you go, okay, the setups that I'm trading, there's nothing different. I'm working it, I'm planning it right, I'm prepping my market, everything's great. I'm doing the same process. I'm not steering, I'm not um, getting away from my process. I'm doing the same thing, but it's just not working for me. Or it will clearly show, if you are getting away from your process, if you are veering off your trading style, you're doing something you try to anticipate, or you're doing something wrong, and then it'll show up. Then you can get back on track, I guess that makes, and try to get yourself out of that rut. And I think it's a very handy process to go through. So what I thought after that rant, I just want to go through what I marked up. I think it was yesterday or the day before. So there's a SPY trade yesterday. I think it was the day before. I just wanted to show you first. Oh, I was just happened to be looking at it this time. I'll just get the chart up. Sorry. 27th, what was that? Yesterday's 28th, 27th. Oh, there you go. Yeah, so it's this chart here. I just happened to be looking at it and I thought, I think I was thinking, this time when it was grinding high, I thought, okay, if that holds the MAs, it could be a reversion to the mean and we could start popping up. And after it, I looked at it. I didn't trade this at all, but this is the kind of process I thought I'd chuck it in the forum as well, but I've saved it. It was mainly to save it and just to see, okay, mark up some of the setups and what's happening and just break down the actual price action. So I don't know if anyone saw this on the forum or if it did make sense or if you find it interesting, but this is the kind of thing I would have done in the past. So when I did mark up my trades, the trades that I did do and the sessions that or the trades that you missed that were prime, or if you did get the prime ones and you did well, could you have hold it more and just take notes? Um, this is the kind of thing I would have done regularly on a regular basis every day and just saving it to a file. So if we're looking at this, we know that the market's opened and it's pushed up. I think this was just into the close, and I think somewhere around here, I think it was this candle, maybe, if I'm right, this red candle just here, which is the close of the night session and the open of the day, and then it started pushing lower. So it was really just that reversion to the mean on the 5 minute, just to clean out a few of these late longs, and then once you've got it across the highs here, I do that regularly. Once it starts breaking up, so that to me is just a good sign. Okay, heads up that we're breaking up out of contraction. We're looking for a continuation trade. So for me, that's a good little area to start looking for a continuation trade. Just got to get rid of something. Just tick. So that's a good heads up to look for a continuation trade. And then, I mean, if you're wrong, the market's going to head south pretty quickly. And you can see that this move down on the stochastics took quite a bit of energy. Revert to the mean. You can see in the stochastics it's getting oversold, and we're coming out of oversold. We push back up, we'll pull back. So this little bit of selling pressure, all it's really done is just washed out that lows. It's retested and just cleaned it out. So when it bounces on this green candle, you go, okay, the market, if it was weakness, you shouldn't have really got that green candle. It should have just kept heading south if it was weak. Okay, so and then you've got to reassess your overall trade. But what it's shown is that you've got this push through the lows, just taking a few stop outs that might have been long off this candle, or maybe this just breakthrough, this breakout trade on this green candle here. They were holding it long. They've just been cleaned out on this candle with a wash out of that low, and then we bounce straight back. So that's really just cleaning out some of the market. And what we've done from there is taken out this high, a bit of a pullback, and this is a prime entry. This is what I love, seeing this type of thing. You've got, you're with the MAs, you're looking from contraction down, you're looking to expand again. And when you get this inside level, we've spoken about this a lot. We call it an inside continuation trade. You get this inside level, it's a higher low. Buyers are stepping up above this level just below 58. They're happy to step in a bit higher and see if they can run that market. They might have bought it on off that low, buying a few more and see if they can take out those highs. So that there, knowing that you've got a bit of a pullback here and you're starting to go, you know exactly where your risk is. You can take it on the breakout of that this green candle here, where I've got that marked up, that horizontal line there. You can take it on the breakout there. Your risk is the red, and then on you go, and you see if you can get a 1-to-1, 2-to-1, see what you can get out of the trade. I don't know where it actually went after it broke through those highs. I can't quite remember if it just built a lower high and started a bit of a pullback. I actually think it got a bit higher before dropping off into the close, but either way, you got some good little profit. So that's some more of a that entry the entry we just discussed across the high, that breakout style trade is less aggressive, and you know exactly where your risk is. That's a confirmed high or low. That's a confirmed inside trade. Once it breaks through there, you've got that push up, pull back, dragging in a few sellers, and then cleaning them back out, squeezing them back out, and that's just going to start extending up to those highs. Technically, that's what should happen. And you've got your risk level, so it's all working out quite nicely. A more aggressive entry, which I do sometimes, but not as such, because it's not confirmed that you've got your inside level. But the fact that from your overall structure previously and what's starting to build, you're anticipating you're going to get that breakout. So what you really do is anticipating that breakout, trying to get a few more points up your sleeve. So if it doesn't work out, you could potentially get a break-even trade or just really minimize your losses, and you are taking on less risk as well. So you're starting to reduce your risk and your payouts end up a lot better. So the basics behind this sort of entry is that you've got a couple of down candles, you've got that spinning top, whatever you want to call it, is more of indecision. The market's opened, pushed down, and it's held down. Then it's got this green candle start to accelerate to the highs. We call it a high too. So a couple of candles, it takes out a couple of candles at recent highs and starts to push up, and you're taking an entry on the break of that candle. It's really on this third green candle here, if you can see that. That's making sense. If it's not making sense, guys, just whack in a comment. So you're taking that entry just through here, just when it breaks through that high on that green line there, that aggressive entry line there, breaking through there, your risk is the same. So you've actually lowered your risk. You've increased your payout by getting to the highs, and so be it. But I thought I found that very interesting. I really like that kind of setup, and I love marking that sort of stuff up and just putting notes on there just to keep reminding myself. So I'm training my brain. That's what I'm looking for. That's my style. That's kind of the structure that I'm looking for in a continuation trade. Does that make sense? So that I thought was quite good. But this is the kind of thing I've got a whole lot of stuff on file of different entries I'll mark up continuously in the past just to try to trade myself. Excuse me. It really helps your trading too, I think. Now, the other one I thought I'd quickly show you and just go through step by step is the trade from yesterday. I'll bring up the first chart. So this is the first one I put up. This is on a minute chart. This is the SPY again. Where was the open? The open's somewhere around here. Excuse me. The open was somewhere here. You know, the market's pressed down to a key support zone. We know that. So sometimes when it's pressed down against a key support, what you're ideally looking for is a bit of reaction and not just a little bounce and then the market to go through again. You're looking for a deeper reaction because don't forget, if the market's come down quite hard from quite a high level, I don't know where that is. So it's 57, just below 57.50. It's come down from at least 58 or even higher. It's had a good run into that level. So what that's doing is really using up energy. It's really using up a lot of energy to come, not to break it, but it's using up a lot of energy just to come in to that support zone. So you know that anyone that sold it from the highs, you know, probably got in nice and early, or anyone that's even late to the trade in here, they know that's the key support. They're probably going to react or close out or at least take some risk off the table. So when they're taking risk off, what they're basically doing is putting, you could say, more fuel on the sidelines ready to go back in again. But a lot of the times when it comes in the key support where it hasn't really, a lot of times, just take one step back, when the market comes in and falls short, say if it pushed down into a key support, maybe I'll draw it up. This is when the markets can be quite powerful. So if we got a key support zone through here, and the markets, there's two different things. This chart we've seen is just come into that support zone. What I expect when it hasn't really had any sort of pullback, it's just come from the highs. You know, it might have done this, come from a high zone, maybe even a resistance zone up here. It's come right down. It hasn't really abated. It hasn't had any pullback, a decent macro correction, you'd say. It's just come straight into that level. You expect some sort of correction like that, some sort of reaction higher before potentially rolling over and potentially taking out that zone. All right, so that's what I'll expect when you've had a good extension into a key support zone. Now, a lot of the times there's another way of looking at it. The market's come down into the zone, it falls short, and then you get some sort of macro correction back up here. So what that does, what it can do a lot of the times is drag in a bit of buying. So people think, oh, it's fell short. We've got a major high low. And then if you start getting to roll over here, that's when it can pierce that level quite easily, because it's what it's done is just squeezed out a lot of these sellers, squeezed them out, put them back on the sidelines prior to coming into that support zone. So a lot of times these kind of setups, if you see this macro kind of correction, I haven't drawn that up correctly, but anyway, you'll know what I'm talking about. Just go and look at some charts. You get that macro correction followed by a lower high. That can lead to another good strong leg, and that's where you've got the potential to really pierce through a good support zone. All right, so I thought I'd just draw that up. That's two different type of scenarios, and this one is what was playing out on the SPY, or was playing out yesterday. So what I was looking for here, you got this push up, where the day opened here, got this pop up, you got this big pullback. So the way I was viewing this potential pullback here is like, okay, we got scenario one. So we're at about this point here. Okay, and I'm looking for that deeper correction of this leg down. So I'm looking for a secondary leg up, or, you know, just to put a further squeeze on the market. But then what we started getting, once we did do that, we couldn't get up to this high. So for me, that started to look like it was potentially rolling over, and that was enough. This reaction off support, it's big. It tried to go lower again. It built that higher low, and it started to squeeze back up again. But this is more controlled than that reaction up. The first reaction was more vertical. This one was less vertical. So it's more controlled. So that's more controlled of selling. Selling starting to pressure the buyers. The buyers are starting to are trying to lift the price, but it's just not getting out. And once we got this essential double top, and I've drew in this support line, you got this essential double top. We just broke down here. This is your key minor level here. It was around 57.78 thereabouts. What I whacked into the chat was just, okay, if we break down through that, I'm expecting a bit of a reaction, building that lower high that I'm looking for on the 5-minute time frame potentially. Because on the 1 minute it looks a bit messy, but on the 5 minute it was more of a clean move down, taking out that anchor, and you're always looking for it to take out that anchor. When we failed to get to previous highs, like we did way up at 5,793, 4, whatever, we failed to get up there. We built potential lower high, and that lower high is becoming confirmed when you break this contraction. So the contraction is up, you start breaking back down again, off a lower high previous to that. So all this structure is adding together and really starting to pressure the market. So we're looking for a potential move lower, continuation. We're looking for a potential move down to this zone at, say, 57.60 to 65. Just looking to see what our risk reward, see if we can minimize risk reward, at least 2 to 1. And yeah, so that's what I was marking up. That's what I was ideally looking for ahead of time. And what played out, it took a bit of time, and I think I got squeezed on the first chart. I think I did have a trade in here, down here. I was looking for, it was a bit aggressive. It probably wasn't the pullback, the ideal pullback I was looking for, which ended up playing out a bit later on. I ended up just jumping in here, getting short. I was looking for 40, was it 72? Of course, it got to 73 before it retraced on me. Took a small loss on that. Then we did get that major retracement. So on a 5-minute chart, it was pretty much that what I drew out, that pattern I drew out. It went down, popped back up, contracted back up. You've got the same scenario, double top, essentially a lower high than previously. Started breaking down again, and then you've got your entry just off this little lower high. And we managed to extend a bit lower. I don't know how low it got again, but this is the second chart. So you can see the just by explaining those two charts, you can see the type of price action we're looking for and piecing the structure together. And on the 5-minute time frame, the MAs are actually down. It was looked a bit messy on the one, but the one's more the execution time frame, and the setups come from the 5, just intraday anyway, and looking for good solid price action on the 30-minute chart as well. So does that make sense, guys? Does that just walking through a trade from yesterday? Not saying that sometimes they work out okay, sometimes they don't, but I think this played out quite nicely. It probably took a bit. I thought it was going to extend lower here. I thought it was going to get a bit harder, just considering the negativity around the market. But the fact is, it actually started rolling over and then lifted again. I thought, oh, okay, here we go. Potentially, we could be breaking up through that high and really starting to put the squeeze on that short sort of built up. But instead, as soon as we got that double top there, and we started pushing down here, and we took out this. You can see this high low. It's only a minor level with this little move down. You've got the little pop up. That's a lower high, and that's just that overall. You're on the right side of the 5-minute structure that way, the 5-minute move down. And of course, that was just, I think we took it there at, I can't remember the price, 77 or 76. And what was that, about 71, 70. There's only a few pips, but that's about as much as my patience lets me sometimes. And you could look at also the reason why not trying to let this ride. Obviously, it was getting a bit late in the day. And there's another thing, you can see that move down. It was a bit more, it's not the sort of acceleration lower that I would like to see. And don't forget, you're coming off a major support. So the fact is, this market could be getting bought back up. It could start to get held up. And this kind of controlled move down, nothing looks to me like it's getting out of hand. So it just makes you tentative. You've been late in the day, you just go, I'd rather just book something and see how we go and walk away, have a positive little day. But anyway, I thought I'd talk about that, guys. Any questions on that? If before we can get into, there's something else we're going to talk about, but I might leave that till obviously Monday. We're not in, next Thursday. Does everyone know what we talk about when I say bid to offer and offer to bid? I know there's going to be a delay here. When I talk about bid to offer, I'll show you what I mean. So I want to explain that. It's just another technical term, bit of jargon. Where are we? I'll close that down. I'll do another one. And put in some charts, guys, if you want. There's just some stocks you want to look at. You help me out. I'm struggling to find some decent ones at the moment. All right, so when I say offered a bid, if this is a support zone and you've got a longer term confirm, it doesn't matter, whatever time frame, a confirmed resistance zone, what I'm essentially looking for sometimes, I mean, it just depends. On currencies, it happens a lot. So you're trying to just, on the currencies, what I was doing the other day anyway, was just marking up some key highs, some key lows where you do expect potentially a reaction off the lows or reaction off the high. Um, and then just see if it can go offer to bid or bid to offer. This is what we call, I would type that up. Actually, I can. So we call this bid, bid zone. And this potentially the offer zone. No, that's good enough. I don't know if I can move that. How come I can't move it? Anyway, so when we talk bid to offer, we're talking from bid zone to offer zone and so on. So if you're looking for markets to come down into the here, we're looking for a potential that you come down into that bid zone. You know that's a confirmed bid zone, whether it's a previous level of support or whatever. What you're looking for is if this bid zone is going to hold up, we call it bid where buyers are going to step in and try to support it. Now, what we'd be looking for is anything. I mean, I wouldn't just buy off the bid, and this is where I'm always trying to. I would rather encourage people not to just sit on the bid and buy it because you never know if the market's just going to one pierce straight through and on we go down, or you don't know if it's going to start lifting off that. I mean, if it starts lifting and you buy off the bid, great. But what I would always be looking for is more of a lower high to build. And a lot of the times the market can drag in, and this is where it can easily drag in because it knows if it's a bid zone, there's going to be some stops below there. They're going to get potentially can target, the market can squeeze them out. So a lot of players will not step in just sitting on the bid. They won't step in because they know this is potentially what could happen. It can get squeezed out. Their stops could get hit. If they buy here, they may have a tight stop. You don't know how far this is going to stretch. Squeeze them out, and then their premise of bid to offer is actually worked out, but they're not in it. All right. So what you'd ideally be looking for, what I'd love to see, is this sort of price action. I'll change colors. Is it where it lifts? You get that washout. It lifts. You break the anchor, so that's the anchor to the trend down, and then you start getting your high low, and you get this type of price action, and then you're buying somewhere potentially in here off that little squeeze. You're off the main bid zone. You know that all your premises are starting to play out. You've got a break of that anchor. You've got buyers starting to step in off the bid zone. And then from there, we just look from bid to offer. And we're just looking for the next level, the key level where it could potentially go to and extend to, and it's up the offer zone. All right, where you'd look for just a reverse reaction where you start getting lower highs and then you get yourself stopped out. But that's the premise when you're looking for key levels. And when we talk about anchors and all that sort of stuff, so all the jargon we throw out there's got some meaning behind it. This is for me is a beautiful little setup off a bid zone, a confirmed bid zone, and then you just pick it out. Whether you've got an offer zone where you can work your trade to, or if you're up into blue skies where there's nothing ahead of you, and then you just got to really raise your risk as you go and look if it gets stretched, the market runs out of steam, booking profits, all that sort of thing. So that's what we talk about from offer to bid or bid to offer. Bid to offer is that sort of scenario, and then if you flip it over, is when we talk an offer to bid, where it's found an offer zone, the market stretched into it, and you tend to want to see that market stretch where it hasn't had a good correction. Okay, and it's stretching into that zone, and then you start to react off there and look for your washouts. A lot of the time, it can easily wash out. All right, so there's all sorts of scenarios, but essentially, what I'm always looking for is that higher low, and that doesn't have to be on the same time frame. I could be looking for that high low to start playing out. If this is a daily, maybe an hourly chart, a 30-minute chart, a 4-hourly chart, whatever it is, but that's what I'm just dropping down to see my high low, because that's a good indication that within that, if this is a daily chart, within that daily chart, because on a daily it could actually look slightly different. If I can draw that up, a daily it might just look like this, boom, and then start to lift and go. It might be a bit hard to get involved there because you haven't broken the anchor, But if you break that down, it's starting to break the anchor of this move down, and then away you go. Does that make sense, guys? I hope it makes sense, because but yeah, I will mark up again. I will be marking up a lot of stuff like this and just keeping them on file just to have a look at from different scenarios. I've offered a bid. I think I was playing around on the currencies yesterday, if I can find that. I'm just trying to mark up different scenarios. What's this? That's not it. It was on the yen. Was it the yen? Who was trading the yen? Someone's trading the yen here. Is that right? All right, whacking some stock um, codes if you want, guys. Otherwise, I'll just keep talking about these. No, it wasn't here. Look, this is, let's talk about this one. This is the US Swiss. I was just playing around on this. I've got a daily chart. What's the weekly? So the weekly chart's saying the market's moved down, it's capitulated, and then we've been grinding our way higher. And what you've got is this rising support zone, and the market's just built. This is a weekly lower high. You can see at 10058, say, that weekly lower high. Very clear. That's a weekly lower high. It's pressed down, and it's just broken out of this support zone. So it looks like it's coming out of that. That's contraction, what we'd say, with a higher lows, higher high. It's contracting higher, and you can see the market's it's smashed down. It's pushed back up and washed out that high only by a minor level, pulled back, built another high low, retested that high. So you're probably better off actually moving that support, that resistance zone just up a touch. So what you've got, it's built at this stage, it's still holding, holding higher lows, it's pushed up. You've got a confirmed, well, it's not really, yeah, it's a confirmed offer zone there. Once we break through this higher low, which we did, that's a confirmed offer zone. And then you're looking for a potential lower high. The lower high is coming to play. And you could have worked, not that I was looking at it at that stage, but some sort of entry off this lower high, knowing that you've got the double top here, you're just broken out of it, broken through this higher low at this stage, you've reacted back up, and then you're looking for that secondary move down. So of course, the next stage is to just see what's going to happen. Are we going to break? Is it going to be a good move lower, where we're breaking from this contraction longer term? It really is long-term contraction up, whether we're going to break down and start to retest way down here at 72, or what's going to happen. All right, so this is what I started getting interested in, is the fact that we've broken down through this contraction higher. And if you go down to a 4-hourly chart, I think it was, you can see that. So it's the same line, it's your contraction high. You can see it's pushed down. We're starting to contract back up. Now here is a zone potentially, you can see how you're holding higher lows, higher low, higher high, higher low, and this high low it's about a 50% retracement of this little minor move up. Okay, then we pull back, we make a new higher high, then we pretty much pull back to retest this low, which is not a good sign for any bulls. Okay, and then we're just at the moment where we're right up at this high, so we could just be reacting off here. So that's just that sort of offer to bid scenario. If we come up to here and we start failing, and the fact that it's extended in here, so that's cleaned out, that's dragged in a lot of buyers, dragged it in, rallied up into support. You've probably broken those highs. If we go down to another 30-minute chart, yep, we've broken that high just here by a minor amount. So here I'd be looking for potentially a lower high to see if this double top, and see if it can work its way back down to 94, the 94, 93, 94, 30 zone, or even lower. Just remembering that longer term structure is potentially weak. Then this could be the start of a major leg down. All right, I'm not saying it is, but all that sort of information that analysis we've just done, couple it all together, this could be the zone where reacting off here, we just washed out that high, and then if weakness starts to come in here, and then I would be looking for ideally pull back. This is your anchor in here, if I can draw it. So this is sort of the anchor to this leg up. It's holding this leg up at the moment. So we can pull back, hold above the anchor, and then go again and take out these highs, and then, okay, the premise is completely shot to bits. But if we come down, I'll draw it up on the other chart because it's a lot cleaner. So if we do, for instance, come down here on a good seller, and we start rising again, and we build that lower high, that's the premise I'm looking for. Well, if I draw that better, So it's a bit cleaner. Pop back up and then get your lower high here. I would like to have a little entry because that's a nice entry. You're minimizing your risk. That's a major lower high in comparative to that one. It's broken the anchor. You've got your major double top. So there's so many factors on your side that's saying that potentially the market could be rolling over. And if you get in here and you could ride it, potentially we could be targeting at least these lows, which is, your risk reward is fantastic. Or it could be the start of a major leg high. I mean, a major leg lower. And if you can hold it, great. Oh, CCA. I just read that. I hate it now. All right. I know you're teasing me, Helen. CCA is a basket at the moment. All right. Does that make sense, guys? I hope it does. Any questions? If something doesn't make sense, just send us an email to support@tradesetup.com.au. Bit of a throw that in there. All right. Let's get on to it. All right. CCA. Yeah, it's up today, but it's below my average. My average is about $1 somewhere, I think. So if anyone doesn't know, CCA is we're into the Ivy coin, the cryptocurrency Ivy coin. And anyone that doesn't know too, if you are following any cryptos, if you like them, Ivy coin, I mean, just do a bit of research. I think it's a cracker, and I think it's got a really good basis to do well. It's going to be, it's a KYC or KYT crypto or blockchain currency or blockchain crypto, meaning that it's the first one that banks will potentially accept that have got their KYC, know your client details embedded into it. So there's no more hiding your money. If you want to transfer over 10 grand, at the moment the banks won't go near cryptos because they haven't got enough KYC information on the cryptos, and it's easy to hide your money. I mean, if they start doing it, people can launder money, all sorts of things. But this is the first one that's potentially going to be attractive to banks, and if they do everything they say, CCA could really, Ivy coin could really do well. Now, based on that, CCA is actually they got I think 30% in Ivy coin, 30% interest in Ivy coin, and I would have thought they could have done well on the back of that, and they're starting to lift here. So when we first started looking at it, was here, we got a couple of good little trades on it, pushed up, and then we just got hammered. It is thin, and that's the problem. It's quite thin, and once it got a bit of a run onto the downside, it just took off. It's getting a bit extended now, but it's nothing to say that it can't go lower. So at the moment, a bit annoyed with it, but we'll see if that one can go. I think once they call it a token generation, where they're just going to generate the tokens, which is the cryptocurrency, send them out to everyone, like myself. Davin's got some interest in other guys we know. Send them out, and then once they list Ivy coin lists on an exchange, then you can put it on the exchange and it's tradable. And then we just have to see what happens from there. And if it starts going, that's why I would expect these guys to do quite well, because they've got a big interest into Ivy coin, and you would expect that would be a bit of a proxy move up. But I think the fact that it's taken a while and people are starting to read into it as a thin market, no one wants to lose money, and that's probably why you're getting a bit of a sell-off we have recently. It was looking like it was going to be up a bit today, but either way, it's really capitulated, hasn't it? You can see from about $1 down to where we are now, 70 to 75. I'll see if it can hold up. But anyone that's interested in cryptos, just take a look at Ivy. You can get on their website, follow them on there. Sorry, just read yours, John. Yeah, bid to offer zone. It's confirmed, a confirmed area where buyers are stepping into the market, and where a confirmed area, and it's not just, say for instance, if you're looking at, it's probably not a good one, but if you're looking at, say, just under 140, that's not an offer zone at all, because it's not where people have been selling. Potentially here is an offer zone. Okay, the market's pushed up into, what is it, 90. It's pulled back. So this little pullback just took out this little high low, took it out. It started to rally back up to it, and it sold short. It doesn't happen so much on stocks, but you will find a lot more bid zones where it's pulled back into a confirmed zone, and it started to lift off there. People are starting to buy it in this zone. So potentially through 50 to 60 is an offer zone on this one, CCA, even though it's not a good example. Let me just see if I can find something else. I'll look at this one, for example. AVZ, so the market's pushed up. It's come back. So it come back once into about 10, popped up, back into 10 again, made a sort of minor high, come all the way back down to that 10 zone again. So that's a bid zone, what we would call a bid zone. It's starting to, so you want to see if it can lift off that bid zone, okay? Or if it's just going to pierce through. So at this stage, you've got a couple of green candles. Wouldn't be buying it straight up there because that's not a higher low for me. The fact that it's pulled back a couple of good red days, it's touched on. It's only a minor higher low, and that's going to be confirmed when you break out through these. Probably draw it a bit closer. Got to stuff that. Where'd that go? Thicker. So here, this is what I would call a potential bid zone on a stock anyway. So your bid zone through here, and the fact that you've had it 1, 2, 3 tests at it, it's buyers are stepping in there. It's not confirmed yet. I wouldn't buy it off straight off that level. Again, I'll be looking for that higher low, which is pretty much what played out here. You can see the market's moved down, popped up, it's come down, made a higher low, only a minor, half a cent or so, or a cent. But as soon as it started lifting again, I'd be happy to buy it off that zone. Even, buying in here as the market's starting to lift. That's probably a premium zone. That's very aggressive, this little higher low, but you're with trend and you're off a bid zone there. So the chances are that it's going to lift. And you can see, even if you got that wrong, you got a few cents up, you can potentially make it break even. You can take it if you come back to your entry. You can do whatever you want. But the fact that it's pushed up it's pushed straight up into that resistance, or that falling resistance. I never know what to call those. And it's pulled back, and then we've gone. So that's a clear cut, a breakthrough here on that green candle. It's a clear cut entry when the market's coming from contraction lower into expansion. You always want to buy when it's going into expansion because it's like the wind's in your sails, if you want. And the market's really starting to get a bit of a run on. And generally, if you're buying it into expansion, you're going to know pretty quickly. I mean, 1 or 2 days, you know that you've got it right, and then it's just taken out. The second day, it took out the high through here, and away you go. And then really, it's just a matter about managing risk from there on in. And what you're going to do, you potentially could have let it run all the way up here, taken a partial off here, given a bit of room. If you did give it a bit of room, you've got basically another setup through here. Market's contracted lower, 1, up, 2, pushed up, out of contraction. You go, okay, heads up, we're getting up out of contraction. I'm looking for my high low. Only a minor one here, and it's popped up and have another run on. All right, so that's potentially what I call a bid zone, where it's touched a few times and it's confirmed, where people are starting to buy it off that zone if it's at least twice. Like I said, that's not an offer zone here. That's not an offer zone. The market's just contracting lower. This is potentially a bid zone. We've touched down, we've popped up, we've touched down, just taken out that low. So that's a bid zone to me. So if I'm looking for an entry, again, I'm looking for the market's pushed down. It's pushed down. So you got your third time here. I'm looking for it to pop up above this level, pull back, maybe a bit more contraction, and then get my entry off that. All right, I hope that makes sense, guys. Did that help out, John? If not, tough. Sorry, I'm just being silly. So that's what we're looking for anyway. That's on shares. It's more you're trying to work off a bid zone, or this sort of structure. When you've got that structure, the market's definitely heading high. You drop it down to a weekly chart. It's pretty clear that it's gone. Let's take another screen snapshot of that on a weekly. This is your move up, contraction, move up. So this is all you're looking on the weekly, but on a daily, you're breaking it down to some lower highs. You're getting a bit more finer detail to actually enter, and you're always looking for when it's expanding, contracting. You're looking for an entry into expansion on the weekly. Okay, you measure your move from here to here. If that's your low, basically you're trying to anticipate that's going to be your higher low on a weekly, and you're looking for that next leg up, which probably extended it a bit more than this first leg. It was got a bit longer into it than the first, and the third leg was a bit shallower. But that's what you're looking for. All right. No cryptos, Paul, or no CCA. What do we got? STO. Let's look at STO. I was just looking at that before. STO is, I think it's borderline. There's a few things I want to see happen first. So let's go from left to right just to work through this trade. I think it's always good just to break it down, what's happening, so you can get the bigger picture. Um, I know a lot of people do it. I know Helen looks at different time frame charts. I know we had people that don't. They tend to just stick to two charts, and I don't think that's enough, as in a 15 and a 5 or whatever they look at. Um, or just looking at the same. I don't think that's the best thing to do. I think to be profitable and to rather than booking 1 to 1, 2 to 1 all the time on lots of trades, I'd rather have one that's a 5 or 6 or 7 to 1. And you're not going to get that by just looking at the same chart. Well, maybe on stocks you will, but I don't think you're going to get that if you're a FX trader, if you're a industry trader. I think you've got to look at the bigger picture. Always looking at the bigger picture. So if the bigger picture is the weekly's heading higher, like you've got this type of price action, what you're ideally looking for is if you're buying it in this zone, say in this zone here, this is what you're looking at on the chart, and you go, hang on a sec. What I'm seeing is we've had a leg up, a pullback, a leg up, pullback. So that's trending higher, all right, on the weekly. So I'm looking to enter, if I can, here for the next potential good leg up. I don't know how far that leg's going to go, and I could potentially get no crypto for me. No worries. What I'm ideally looking for is I know that the bigger time frame, whether it's your weekly, if you're a stock trader, or if you're looking at FX2, your weekly chart, your longer term chart could be your daily, it could be a 4 hourly chart. It doesn't matter. But if that's your longer term time frame and you want the longer term on your side, you wouldn't want to be buying up here. Okay, if you're potentially buying up here knowing that it's gone up, had a pullback, it's gone up, you're looking to get extended, the longer term time frame is extended up here. You wouldn't want to buy it up here. You want to put yourself into the highest payout odds area zone, if that makes sense, which is here, is potentially buying it after a good pullback and looking to go again from contraction into expansion. You're always looking to buy into expansion if you can off your longer term. And then it's just breaking it down to the lower time frame charts to refine your entry, to get a good entry where your payoff is bigger than just 2 to 1. It could be 6, 7, 8, 9, 10 to 1. You don't know. And that's what you're always looking for. And you like to give yourself the best chance. And that's what I think you're going to get when you look at your bigger time frames. Try to put yourself in the right areas, the right zones to buy in your bigger time frame, and trying to use your lower time frame charts. Like I said, I might have a 4 hourly chart, a 30-minute chart, a 5 and a 1. All sort of line up. They're sort of the main intraday charts I would use. Okay, what's the 4 hourly chart doing? Okay, what's the 30-minute chart doing? The 30-minute might be heading up. The 4 hourly could be heading down. That's not so, because that's a longer time frame, but you just want to know what it's doing. And what's the 30? Go down to your 5-minute in conjunction with your 30 to see what a good zone is, where you want to buy, and to refine it. I'm looking at a 1 minute just to refine my entries. Nothing more, nothing less, just to refine that entry, but in the right 5-minute zone based on a 30-minute chart. I hope that's all making sense. But this is ideally what I'm trying to do by using different time frames. And by using that, you're trying to get your biggest payouts. I mean, if you were buying here, for example, the market start to lift, and you're not looking at your longer time frame, I'll just take that one step back. If the market's moved up here, and this is when you started looking at it, you don't know what this longer time frame is doing. You're looking at your shorter time frame. It could be looking quite good. All right, you might be getting a couple of higher lows like this, and you go, oh, great. I'll buy it when it breaks. The next one, it breaks. The next one, it goes up a few points, and then bang, it rolls over because you've got that major lower high play out. All right, and then you get caught. You get stopped out for no other reason. And you step back a time frame. You go, oh, that's what, because I'm extended. I'm getting a bit extended on the daily, weekly, whatever chart, your longer time frame chart. So it's always good to know what the longer time frame is doing. So back to STO, looking at the weekly, that was a bit of a sermon, wasn't it? I get sick of myself sometimes. Yeah, no, that's exactly right. If it's in a channel, you want to buy at the low, sell at the high, and vice versa. If you're looking for a short, sell at the high, buy at the low. It's a bit more aggressive selling, but that's what you're looking for. So this one here, what we've seen is come off a high, whatever that price is. Your market's moved down, boom. Started to find a few buys in at $6. And you can see this is great. It's always good to see this. You can see it reacted off 6, pushed back down, traded at 6 again, tried to go again, come back down to 6. Third time lucky, you go, okay, the market's been quite strong. So there's buyers stacking up here. It's had a deeper pullback, taken out that, and then boom, straight down again. So it's anyone that's been buying it through here has been squeezed back out of the market. Okay, so that's not the best way to be buying, especially when the MAs are down. It's just a reversion to the mean. The market's head down again. So what we're doing now, so that's all part of one leg down. What we're finding now, okay, we've got this good reaction up off just below 3. Okay, we started to head down. We've come back down into that zone. All right, so once you cut back down to retest the lows, you're looking to the most recent lower high, which was around that $5 zone. We pushed up, so the market on the weekly has had a good reaction up. Okay, it's broken that zone. So for me, that overall move down, and you can see by the steepness of any sort of move down, it's starting to, the gradient is lessening and lessening every time it's moving down. Sharp move down, less of a gradient down, less conviction in selling because it's further on in the trend. Okay, good bounce back up. That selling pressure was quite the same as that sort of selling pressure. Then it's reacted up, and this move down was quite controlled. It's come back into support, and then buyers. So buyers could be buying it on the way down. That's why you're getting the gradients lessening. Buyers are buying it on the way down. It's reacted off that support zone, and it's reacted quite strong. It's reacted all the way up and through the most lower high. So that to me is your heads up on the weekly chart that you've got a trend change. Okay, whether you're going to trend up, you don't know, or whether you just consolidate, potentially between that high, you find a base and you just consolidate through here, or you just chop around. You don't know what's going to happen. It can easily pop up through 5, work its way all the way back down to 4, 350, 450. You don't know what's going to happen. So that's where you drop it down a time frame. But the weekly to me is saying that we're lifting. We've got a double bottom here. We've broken a lower high. We're starting to pop up. Buyers are starting to get excited about it. What's happening? Dropping it down and look at the stochastics too. This move down on the stochastics has been quite heavy. Selling pressure is quite heavy. Look where it got. It got from just around 550 only as far down, just below 5. So that really is a really good signs that buyers are supporting it. Buyers are stepping into STO, to Santos. At higher levels, they're happy to pay up to potentially be in a good move higher. Dropping it down to the daily, what are we getting here? The one thing that does why I wouldn't just buy it, I wouldn't just jump in and buy it now, is because we haven't confirmed a move up. So what we've got, this is your weekly, weekly move up. That's your final sort of anchor to that leg up of that, weekly. This is your daily breakdown. High, pull back, high, pull back, high, pull back, high, pull back, high. We've broken through. Okay, we've broken through below that. We've had a good move, a bit of a lower high, push down. We've broken that anchor. The thing is, we didn't get too far. We've pushed down. We've retested that low. Like I said, I wouldn't buy it just yet because this is the key for me, is to break that anchor to the downtrend. So this is still contracting in my book. We haven't broken that 520 zone. So from here, we could easily, I'm not going to draw it very well, we could easily push down. All right, we could easily take out this low at, was it 480, and head in a deeper correction. And look where the stochastics are too. You've gone from oversold to overbought. We got to overbought. We can only get as far as that 520. We only touched up on that little minor anchor level, and we're starting to struggle again. We've got a red day today. All right, so for me, Santos is okay. It's looking good on a weekly. Stochastics in a good zone on a weekly means it's potentially somewhere around here we could find a higher low. So what I'm looking for here, if I can draw it up, that's that 2 moves down. We've popped up. Oh, that's a bit more than what I should. Come on, mouse, getting a bit excited. Popped up, contracted back. We've popped up. So this is what I'm looking for here. I would like to, ideally, I would always like to see a pop up through contraction and then your high low form and then go to give myself an entry. But if we don't get that, if we do just contract off here, I would be looking for buyers to step in at higher levels, and then you might get it to start to run. It's always a tad of a risk, but you're working off a higher low, meaning you're working off a higher level where buyers are starting to step in. It's probably a bit more aggressive when you haven't broken 520, But hey, it could work out, especially if stochastics go from up here at 520 being overbought, they go to oversold, and you're at a higher level, say somewhere around $5 or 510. Not a bad sign. It's worth having a bit of a go at. Yeah, so Paul, I like the weekly chart. I mean, it's not my reason for buying it. My reason's always off the daily. I'm looking for my setups on the daily, but I think the weekly chart's in a good little buy zone. But I haven't got any confirmation. Nothing's proven that I'm right yet. Does that make sense, guys? I didn't realize how much we're babbling on today. Just let you talk now. So yeah, ideally this is what I'm looking for. Maybe that sort of price action or a bit of a pop up through 520 and then the higher low build. All right, probably have to call it a day there, guys. If there's any more questions, if anyone understands just what we're talking about in STO, I hope you do. But yeah, it's just piecing together using different charts. Yeah, I'm not going to knock it back if we build that structure. I wouldn't want to knock it back as a buy purely because sometimes it is a good sign of strength. It's gone so hard and it's washing out traders, but it's washing out, people are buying at a high level. I wouldn't want to knock it back, but on the daily, I don't like buying when the market is stretched. The stochastics are showing me it's taken a lot of energy to get it up to just a 520. So I don't like to buy off that daily, but I like where it is at a weekly, if that makes sense. So yeah, it's just all a matter of just sitting back and being patient and seeing what plays out. And if it takes off from here and I miss it, so be it. And tough, let it go and move on to something else. Yeah. All right, guys. So I hope you can understand how this is my personal way of why I like to piece together a trade of building it from maybe a high time frame to a lower time frame. Um, doesn't matter what it is, what sort of time frames, and what I'm looking for from the price action to get confirmation that we're piecing together the right picture. And also what I was mentioning before about just taking snapshot of trades. It's always good if you're into learning your technical analysis. Your technicals, it's always good. It's good to just go through that sort of motions, take it a snapshot, saving it to a file of different charts, and then every now and then go back and reflect on them. Especially the good trades. What was the key component of that good trade? Why did it go so well? Or why did that trade not work for me? I mean, sometimes you can do the right thing, but there's a little key bit of information that you might have missed, and it's all in the name of refining your trading strategy or refining your edge. Once you've found a bit of an edge, the idea is to refine it, to eliminate as many stuff ups as you can and try to maximize when you're right. And you're going to know when you're right is when you've looked at it time and time and time again. You're going to know, okay, this has got the same characteristics of the chart I've looked at, a week ago. Of those charts I've got on file, it's got the same characteristics. Everything's starting to play out. Let me see if I can ride this one a bit longer and try to make, rather than 2, 3 to 1, I might make 10 to 1. And that's the idea behind just taking snapshots. But anyway, all right, guys, thanks very much for joining me. Again, I hope you enjoyed that. If you've got any questions, yeah, feel free to send through an email, or if you're on Discord, just let's have a bit of a chat on Discord. Bit of banter. It's good to have a bit of fun on there. And what was the other thing? Have a good Easter too. Obviously, we're not going to be in on Monday, public holiday. I'll be somewhere between a chocolate hangover or a beer hangover potentially. Probably not. I'm going to go for a run tomorrow morning to feel good about myself before I have a beer. But yeah, hope you have a good, safe Easter, and we'll be speaking again on Thursday, a week from now. All right, guys, cheers. Speak to you soon. Bye.